whoa, whoa. We're about to fall off the edge here. We're peering over the edge of an abyss here. Is the market going to collapse-orama like the doom and gloomers have told you it's going to? Or is the market going to stabilize and start to rally again because nobody thinks that the Fed is going to tighten interest rates in September? They're going to wait until December at the least. Which is it? Which is it? Let me tell you what's really going to happen. Hey everybody, Courtney Smith here with our TradeSmith weekly video newsletter, bringing the hammer to the markets for over 45 years. Scary. This is also pretty scary because it basically tells you that, oh man, this is super risky. It's just completely ridiculous. Okay, let's take a look. Lots of stuff on this chart of the S&P 500. First of all, let's start up at the top with the price action. A lot going on here. Number one, of course, we still have that big gap up there in the market that happened a little over a week ago. That's still a big bearish feature. Then let's look at Friday's price action. That little bar is called an inside day because the whole range of Friday's price action was inside the range of Thursday's price action. And that sign, that inside day, is a sign of tension. It's a sign, though, that the bulls and the bears fought to a draw, that neither the bulls nor the bears are in charge of the market, whereas up until then, the bears were pretty clearly in charge. How do we use that information? Well, I'll tell you in just 1 second. Let's keep going. The purple predictor plunging to new lows is a pretty major bearish feature on this chart. The purple predictor has a great track record, and you can see here it shows that the smart money is still leaning on the market. Let's go down to our second red arrow. Huge volume on Friday. Even though the inside day was a battle to a draw between the bulls and the bears, it was on huge volume. That tells me that this inside day is super important. I'm going to come back to that in a second. Down at the very bottom, that's an indicator called the ADX. And what it is that it tells you how strong the trend is. So it's a trend indicator or a strength of trend indicator. And this shows that the strength of this bear market is actually going up, that it's a strong bear market internally. Okay, let's go back up to the top. That inside day, heavy volume, makes me believe that this is an important inside day. Here's the way you're going to trade it. Here's the way I'm going to trade it. I think you should too. If it breaks the high, if the price breaks the high, I'm going to probably start to cover some of my shorts. I have shorts on, I have hedges on. A break of the high would probably lead us to rally up to 2170 to 2180. So not a big rally, but at least it would be a rally that would put the market back up into that old trading range. But a break of Friday's low would lead me to believe that we're going to drop another 2 to 5% lower. So Friday's price action, because of the heavy volume, is probably going to be broken on Monday. So Monday is going to be a super important day for the marketplace because of all this price action and volume action. Dow Jones, same picture. Look at that purple predictor, plunge-orama. It's just like the S&P, only worse. But on the other hand, the NASDAQ is kind of the same, only better. In this case, look at on Thursday, we actually filled the gap. We filled the gap. Now, what normally would happen is the market would then start to turn around and go lower, which it did a little teeny bit on Friday on heavy volume. So just like the S&P, that little teeny bar is a really important little teeny bar, and it's going to give us the key for near-term price action. But what it's also telling us is that you're better off being long NASDAQ type stocks and short Dow type stocks. Seasonality, slightly bearish, no big deal here. Seasonality here, I like the blue line. We talked a lot about that. Looking for the market to maybe sell off a couple, 3% more, maybe 5%, but not even get to 10%, I don't think. Yield curve, still acting as a cap on price action. It's not bearish yet. It's just simply holding down the bulls. Asset allocation, on the other hand, is moving a little bit in favor of the S&P. I'd actually like to put it another way. They're bailing out of bonds. That's the real trade. So even though the stock market is weak, it's stronger than bonds. Stock market risk indicator really going nowhere. We can ignore this one for now. Global shares under pressure, looking bad, making lower lows. Bond prices. Now, this is where I think the action is and where we need to focus our attention. Got that triangle formation, that pennant formation, gap down, heavy volume. The market's plunging down more. I think we're going to head down to that purple line there at just under 132. That's a pretty big move in the market. That's almost 10 full points. Pretty big move for the bond market. So this is something we need to keep an eye on. A break of the purple line would tell us we're going to drop another 5-6 points pretty quickly. Bond key factors, 2 suggesting lower interest rates, 1 suggesting higher. But as I've been highlighting for many months, the most important line on the chart is the blue line, because that's the big competition with the U.S. Treasuries. That's the German 10-year Treasuries. And that one's saying higher interest rates. And that confirms what we saw on the previous chart. The dollar, whoa, kind of interesting here. Here's the dollar index. And we've got, I'm really not a big fan of trading this because it's been in a big trading range for so long. But notice that we have the potential now for a head and shoulders bottom. If we break through the 96.25 area, that would suggest that we can move up to 98.25, which would be higher than the high on this chart. So once again, we're very close to that line. Monday is going to be a really important day. There's a good chance we're going to break through that purple line, the neckline in the head and shoulders bottom. If we do, I think you got to start looking to get long. I've been on the sidelines for a long time here in the bond market. I'm just not excited. We're trading at the same price as we were 6 months ago. But break of this head and shoulders bottom would start to get me kind of pumped up. Gold will get me kind of pumped down. Look at this. We're sloping slightly down. That shows that the bears are more in control of this market than the bulls. They're not crushing the market. They're having a hard time pressing the market down. So I'm not looking for some big collapsorama here. But on the other hand, why do I want to trade this market? It's going nowhere right now. Longer term, I'm still bullish on gold. But short term, this is not a chart that's saying buy me. It's saying bite me. All right, gold indicators, pretty neutral, and that price action is confirming our key short-term indicators in gold. Oil market, this is starting to be kind of interesting. Still don't want to trade it though, want to stand on the sidelines, but look at what's happening. We got down to the lows that we made 2 weeks ago, and a break of those lows would suggest we'd go down to about $40 per barrel. Certainly the fundamentals suggest we should continue to move lower. But look at that green arrow. How come we just have no volume at all in this market? And that's kind of a little bit supportive. So maybe oil's going to hold up okay. I don't think we're going to break the lows we made back in August. That's not going to happen because demand is slowly but surely moving higher. Slowly but surely, everybody knows the bearish argument of all the supply, so that's already factored in the market, and that's why the market was able to rally off those $28 lows earlier this year. But right now, boring, don't want to be there. I want to be in the bond market. I want to be in the stock market, because in the stock market, there's sectors that are going up and there are sectors that are going down, and that means we can be a buyer and a seller and actually make money on the long side and the short side. But hey, you fully paid up members, you already know that because you see the specific trade recommendations and you know we're making money on the long side and the short side at the same time. Man, that feels good when you do it. All right, hey, freebies, you got to sign up. I'm serious. You're missing out on a lot of money here. But hey, it's up to you. It's okay. You don't have to. But it's a peanut, $47 a month, less than a Starbucks coffee every day. We will see you freebies. Love having you around, but you got to keep watching here closely. We've got you saved on this down move in the market. We got you saved on that. We got you covered. Fully paid up members, of course, see the actual trades I want to do. So fully paid up members, hang on just a second. Freebies, Love having you here. We'll see you all next week.